The average rate on the 30-year fixed mortgage jumped this week to a 23-year high of 7.48%. Folks, that is more than 100% increase from the days of free or cheap money that we experienced for just about a decade. So it's sort of unusual to see the price of homes continuing to go up when interest rates are going up this high, because it really impacts affordability. Because the cost of buying a home, unless you have the cash to do it, which I read is nearly 1 in 4 homes these days are paid for by cash. But if you can't do that, you've got to go get a mortgage. And right now, mortgage rates have jumped, like I said, from 3, 4, 5% to over almost 7.5% in some cases. And that's just the average. If you don't have great credit or, other factors, you may be paying even more than that. Now, from a very, very long-term perspective, it's not the end of the world, to have a 7% mortgage, maybe even 7.5%. I mean, it's what you do whenever you're growing up, when you're leaving the nest, when you're, finding a spouse, in most cases, to start a family. So you have to have a home. You just have to find out how to be a good steward in doing that, because now the research tells us that Americans are needing to spend 43% of their income to afford a home. So with interest rates going up, that is increasing the cost of home ownership, not to mention what's happening with insurance. So insurance premiums are increasing as well. I suspect the other piece of home ownership, or if you're paying a monthly note, is your taxes. Taxes are likely going up too, because property taxes in many places are based on the value of your home.